Here it is saying, Jim Dalton says, if the market is tanking down, it's not the smart money who is doing it. They don't come to the market crash. They are here to crash it. First and foremost, you need to understand, you need to differentiate between smart money and time frames, right? So smart money can be available on all time frames, right? So it can be on higher time frame, it can be on shorter time frame. Both smart money have different objectives. They have better know-how of different time frames, and they will trade on different time frames. Now, if higher time frame smart money is entering the markets, it is going to destroy plans of shorter time frames, and if you can join them, then you can get rewarded very, very handsomely, right? Now, when, let's say, in this particular case, when bank nifty is falling like a rock, right, here obviously higher time frame short smart money, it's not going to come and sell when the market is falling so sharply. They probably were selling when the market was going higher and giving you poor trade facilitation, because the higher time frame smart money was selling. But shorter time frame smart money, if you now look at this chart, right, and let us make it a little bigger. So now, if you ask me whether shorter time frame smart money are not trading here, it's not true. It's not true. You can see this HVN, you can see this HVN. Who's trading here? Why this volume is getting attached at these levels? Because there is a consolidation. Why the market is consolidating? Because there is a struggle between buyers and sellers. What is the follow through towards the downside? Who's winning? Sellers. Who are selling here? Smart money sellers. Make sense? And they are making money. They are making money. It depends on the time frame. It depends on the time frame. So when he says that smart money is not trading here, it is not that. It is that higher time frame smart money is not selling here. Shorter time frame are definitely selling here, and we have to be with them. And that is the reason why we have those intraday trading guidelines. Now you see, anyone who bought anywhere today is going to lose money. Anyone who sold anywhere today is going to make money. Why? Because the smart money, short-term smart money, are trading from the sell side. And how do we know? Because the market is below VWAP, VWAP is trending, range extension, one time framing, all cumulative delta, negative territory, delta jumps, everything is happening. It is pointing towards more downsides. Market is going to go much lower. All right. So just stay with the framework, and it will put you more often than not with the smart money. But depending on your time frame, like if you want to trade intraday, use intraday trading guidelines. If you want to trade from higher time frame, use market profile chart, use context, use maybe credit spread or different strategies, right? And that will help you.